Hey guys, this is Market Update. You may have seen some charts like this recently comparing global money supply with Bitcoin. Very highly correlated. I believe this is from Jamie Coots originally, this chart. So are we getting a contraction in global money supply? Is Bitcoin and crypto going to contract over the next few weeks or so? Let's go through that in this video. Small technical details in a much broader structural bull market that's going to carry on throughout 2025, in my opinion. And I'll show you some data on why I think that. So are we going to get a pullback? This isn't a pullback. Coming down 15% from the all-time high. It's not a pullback, right? It's just literally just normal price action. I hope we go lower. On the daily chart, you can see this right here, 91, 92K would be a big support. A real kind of pullback for a bull market would be down to this level at kind of the 89 level. Not sure we'll even get there. It's because this M2 is actually valued in dollars. And so it looks like it's contracting, but it's not actually contracting. If you go to the money supply stats, you can see that M2 is actually increasing right now. It's positive, which means money supply increases versus a static currency like Bitcoin does have some inflation, but tiny. That means that all else being equal, you just get an increase in the price of Bitcoin valued in those currency units because you're expanding them. So dollar is strong, and no one really wants a strong dollar, even America, right? They actually want a weaker dollar than it is so they can try and bring the economy back there and manufacturing and export their way out of this debt to GDP scenario, right? So that's the story for 2025. And I think that is the bull market for 2025. I hope we get a bigger pullback than this so I can, keep buying, right? Because we are still in the buy phase. Now, the 2025 bull market, if that comes with a lot of liquidity and, some dollar weakness, that's going to send the riskier assets out on the risk curve a little bit. That's an altcoin season, right? That's what people are hoping for. That's great. Up until now, it's still Bitcoin outperforming everything else. I'll show you that. If you do trade, check out Bybit, $30,000 deposit bonus down in the description. If you can't trade there, Bybit's DEX is awesome. You can trade on here, just connect your wallet. You get a permanent fee discount there as well. I'll link that below in the description. There's going to be a lot of uncertainty over the next few years, even next few months, because we have a new president coming in and we have Doge, which is apparently cutting government spending, cutting government jobs. The problem is that the government, according to Grok, this may be out by 5-10% or so, the government makes up 35% of US GDP. And in the UK, it's even more than that. So what you're saying is, just imagine if one company was responsible for 35% of your GDP, and that company said, we're going to cut spending, cut investment, and cut jobs. It's not bullish for the economy, right? Well, that's kind of the same with the government. Even though a lot of this is just profligate spending, it's keeping GDP higher. And that's preventing the complete collapse of the economic system because it should collapse because the free market should bring GDP and the price level down. But we all have debt on assets on the premise that those assets go up. The nominal value of them goes up over time. So this is potentially, if you're cutting this out of the economy, you're going to cause a massive drag on GDP, right? And inflation. And that can cause a huge recession. Right? It's essentially the price level going back to normality. But of course, if that happens, all the debt becomes completely insolvent and bankrupt again. So there's a lot of uncertainty with all of this. And the way it's going to come out, no one can really tell you those short-term moves. But I think if you take a bigger look at that, what it means is if they do cut that, then sure, hopefully the private sector can create economic growth. And that's currency debasement as well, because banks have to create credit for that economic growth, which is currency debasement. But if we go to the Fed and the balance sheet of the Fed, the central bank, anything that shows that GDP is going to be soft, they're going to come in with stimulus. They're going to cut rates and stimulate in some way, right? And that means potentially more money printing. So either way, I just think it comes into currency debasement, which is why Bitcoin and why assets. This is gold versus the balance sheet of the central bank. It's around 10% a year that you have to outperform. So a 10% is the hurdle rate. That's the rate of currency debasement long term in the dollar. It's way worse than other currencies. So 10%, if you make 10% a year, you're not actually making any money in real purchasing power terms. You have to outperform that to actually make money in purchasing power terms. Gold doesn't really outperform the balance sheet, although it's certainly better than dollars or or dollar denominated debt or any of the other currencies. But this is gold valued in Bitcoin, down 99.9% because it just outperforms the balance sheet. Now it's not going to do that forever, which is why I call Bitcoin the trade value generation. You've got basically the thing that is world money, should be really, really, non-volatile, very boring in time, but you've got 40 to 50% growth right now. So the trade value generation. So we have to outperform this. It's going to be super volatile. as you go through all of these changes. No one really knows what's going to happen, but longer picture, if you're an investor, you have to get out of this and you have to go into strong assets, BTC, right? Trade of our generation. That chart I showed you at the beginning of the video with global money supply contracting a bit, maybe that's this tiny bit right here, but look, we're in a big bull market for money supply growth. It's positive. We're making higher highs, higher lows, and look, it can get to much higher levels here. This was the pandemic here where global money supply should have contracted. GDP and inflation should have been negative. They just printed money. And that means that GDP, inflation, it doesn't measure anything in the real economy. It just measures money supply shenanigans. They printed loads. The price level rose. It will never go back. They drew it down, and now they need to debase the debt again by raising the price level. And the way you raise the price level is by debasing the currency units. And so those things look more expensive. And that means that the debt doesn't become bankrupt and you just roll it over and over again. So that's what they're doing. And so you have to be in assets that price in all this money debasement. And we're on the upswing. So that's the main thing here. You can see here as well, bill issuance. This was essentially through the election in the States. They just flooded liquidity into markets to pump markets higher because, of course, you can't have a recession or anyone getting made redundant during a recession because that's going to help you. They failed anyway. They lost. And this is Bitcoin pricing it all in. So how do you actually make returns here? You have to price in all of this plus the growthiest aspects of the economy if you want to outperform. If you're in the S&P, this red line here, look, that's great, but it's kind of more or less currency debasement. It's a very broad, diversified index of very old companies that don't have a lot of growth left, right? So then you go out the risk curve, you go to NASDAQ, which outperforms a little bit, which outperformed, but it's still, still very good companies, very high quality companies. Now you go a bit further out the risk curve if you want more volatility. Bitcoin's just outperforming everything else. Now I've got here indexes and gold, because if you compare BTC to Nvidia or Tesla or MicroStrategy, they're much smaller things. They're just individual things, right? For the bulk of our portfolio, we have to invest in large asset classes for the most part, right? And so you have those trades around the edges, but the bulk of your portfolio has to be in a large diversified index. Now, Bitcoin is a trade of our generation, in my opinion, because it's the largest, most diversified index in the world because it's money. And that means it indexes everyone, anyone who owns it, an individual, a corporation, a country, anything that happens, that's an index of the whole world. This should be the most boring asset in the world. And in 25 years, it will be. But for right now, it's outperforming everything else. It's got 40 to 50% a year growth. This is the trade of our generation. And it's outperforming altcoins. It's outperforming DeFi. And so you have to have it at the bulk of your portfolio. I mean, it's just the outperformance is there. Now, if you go to the last, let's say, few months or so, you can see DeFi and maybe some altcoins are starting to outperform a little bit. 2025 should be in the Bitcoin cycle alt season where you get a lot of outperformance there as well. But I just think the best way to play that is, just invest in index, right? Bitcoin is the index, maybe crypto cap index. They're starting to come around now. You can see some ETFs maybe starting to do this, which is probably decent as well. Just gets you broad exposure. Like, I'm not going to go through individual assets here. There are many that outperform BTC, but just the bulk of your portfolio and index right here, BTC is the index, right? Because it's outperforming S&P, outperforming NASDAQ. So it's not going to do it forever, but it's a trade around generation because it is now. Because of what the Fed said last week, the market is pricing in just 35 basis points of cuts next year. Now, next year is when the bulk of the refinancing has to happen. I don't think the government is going to want to refinance at over 4% on the short end, right? And so what I believe will happen is that the Fed is going to act tough. It's going to lie, just like it always lies, about inflation being transitory. It's not transitory. You made it. You designed for that, and you lied about it to all of us. And now you're lying and saying that you won't cut rates next year. So you're going to keep them high. You're going to keep them high. And then just when the bulk of the Treasury refinancing has to happen, you're going to cut them as low as possible, refinance, and create a ton of inflation, which is a bull market for BTC. And then 6 to 12 months after that, when all that inflation comes out again, you're going to have to draw it down again, which is the next bear market. And we go through these cycles again and again. So bull market still on. If you trade, check out Bybit, deposit bonus down below, and you can trade on Bybit's DEX, which is Apex, with a fee discount via the link below as well. I'm James, this is MyZG. Cheers for watching, and I'll see you in the next one.